Hi trader, today a different video than usual about the Czech crown. It is not a currency that we of course monitor day in, day out. As you know, we're looking of course at the majors, but in this case it does make sense to look at it because of the National Bank and its announcements that it's been making in this year and previous years. So there is a development that is going to be happening tomorrow, perhaps on the 30th of March, or in May or June, second quarter of 2017. But before we dive in what that announcement could be from the Central Bank of the Czech Republic, let's take a look at some basic statistics of the Czech economy. First of all, there is a pickup of the growth. We see that GDP is growing. Inflation has ticked above the 2% target and is actually going to 2.2 in January, February, 2.5 as far as I've seen. So definitely some growth in the inflation rate. Unemployment has decreased so far that it's become the lowest number in the European Union at 3.4%. Public debt is very low, and there's actually a budget surplus at this moment from 2016. So definitely good figures, good economic figures. With this taking place, basically the loose monetary policy, that has been happening right now, where the Czech National Bank is intervening in the market to keep the crown weak, does not seem it could hold for all too much longer. So that's something that to keep an eye on. Now, what has happened basically is that, as I said, there has been an intervention, which of course creates an unnatural playing field for this particular currency. And that is always something that I think is very risky. My personal opinion with central bank trades is that it's risky. We saw that with the Swiss National Bank. I don't expect the same volatility. I don't expect the same impact as with the Swiss franc. Just because the Swiss franc has a pretty substantial role as a reserve currency, the Czech Republic has that role, does not have that role as prominently, or does not have that role, period. So I think that is a bit of a difference there. But anything that is connected, a trading plan that is connected to the central bank, I think is something that is always a bit dangerous, especially if leverage is used, right? If it's no leverage, that is a different matter. But with leverage, I think that is personally something that has always its risk involved. But despite that, you see the speculation is increasing because of the fact that indeed traders and investors are anticipating a move by the Czech National Bank somewhere from now, the next 3 months probably. So speculation is increasing. Let's dive into the chart right now. So this is the Euro Czech crown. This is the weekly chart, and you can see that price is more or less going flat. This is of course clear intervention territory, and it is not natural that the market is going so. To do that, of course, to make the price go flat like that, the Czech National Bank is intervening. And it is apparently intervening at greater intervals, more and more, even actually apparently more this year than even in 2016 already. So how long is that, sustainable? And that is probably not so long. There could be a movement pretty soon based on that alone. Of course, the Czech national economy is picking up speed too, which therefore could lead to inflation rate even increasing, therefore the need to start to increase the interest rate, which should make the Czech crown more appealing and therefore more strengthening. All right, so the strengthening seems something that should happen. What that means is that the Euro Czech crown is expected to fall. However, will it fall immediately? Will it fall slowly? Will it first not fall, and will it first rise? That is the question. In the long term, at the end of this year, let's say, there's a decent chance indeed that the Euro Czech crown will be lower than 27, right? I'm expecting this 26 target. There's a decent level. I think that the price could fall to, but it could extend further to the minus 105 target here, 25, 40, perhaps even to the 25 psychological level. Okay, so that's something that will have to be seen. Of course, a lot depends on how price, when this peg is released, how price will respond to that peg. And you can see that I have a fib from here to here. I'm expecting price to first retrace to one of these fibs, the 38, 50, 61.8 fib, 2750, 2770, 2790, perhaps are levels I think before price will make that fall down. This is my expectation at the moment, but a lot depends on how it opens what kind of price action we see after, basically the peg is released and the market starts to function as a market again without the intervention. All right, so a lot depends on that. But at this moment, I'm expecting that. If price moves down slowly like this, and then hits the minus 272 target, it could still be an upside, and then a downside like that, right? Some volatility, certainly got to be aware of that. Or if price opens with a gap up and then moves down low like this and then up. So at the beginning, keep an eye on different scenarios. I think a lot of volatility could be expected. Not massive volatility like the Swiss franc, not that, but relatively, of course, more movement than we've seen before in this part. This is basically, at this moment, a range, sideways range. So a breakout of a range that long is always volatile. And this is a range, just to give you an idea, that has been almost going on for 2 years. Other scenario is kind of a corrective rising wedge formation like this, up to the fib, and then I would expect a turnaround and a movement down to these targets. Just to give you an idea, you can see that historically, all right, around these levels for more than a decade. So nothing very strange if price were to make that dip at the end of the year. So this is what I'm expecting for the moment, but be careful. This is really from a trader perspective. When it moves from 27.50 down to 26, 25.50, it's really not that big of a move. Of course, this is something that the pound probably does day in, day out. However, it is attracting attention from traders and long-term traders and investors, just because of the fact that the Swiss National Bank is, the Czech National Bank is indicating that it might change policy. All right, but from a trader's perspective, this is not a type of movement that is really a massive movement. If you look at pound yen, pound dollar, euro yen regularly. All right, but something to be aware of. This is my opinion at the moment, and let's see how the next few months take shape. All right, wish you great trading. Talk to you soon. Cheers.